All right. So I am going to record this and then I will upload it into the group chat. So if anybody has any questions or if they just want to review on their own time, they'll have something to guide them or to go along with. Okay. All righty. So first things first, once you have typed in your pair that you want to trade, or pairs that you're wanting to trade. Once you have decided on that, you type it in there, and then you're going to come to this beautiful chart here. Once you are on this chart, most charts are going to have the white background. If you want to change it, you just right click anywhere in an open space on your screen, and you come down here to settings, and then you can change from here. So you have your style, you can click on it, change it to whatever colors. Scales, I have never touched the scales. The scales are just fine for me, but if you want to change it, this is where you would do so. You can change your background color from here. One thing is very important with the market makers method is you do need to know when your your sessions begin. And we are using right here, you have your session breaks. So you want to make sure that box is checked. Here is your time zone. So if you are on a time zone that's not yours, like I am Central, so I have Chicago. If you are Eastern, it would be New York. Los Angeles would be your Pacific. And I believe any one of these, Phoenix or Mexico City, might give you Mountain. I think I used Denver when I was there, over there, but this is where you would find where you could change it. So you change it to whatever time zone that you need it to be. Personally, I need Chicago because I am Central. And then this right here you can play with. It shows you your position. It's just basically little extra things that'll be on your screen if you want it there. And then your events. Events is usually a little round circle down here with the flag of that particular currency's, with the flag of that currency, and it'll tell you how many news events are going on right then. You'll see 1, 2, 3, 4, however many. You see the flag and you'll see their number. So that's what that's about. All right. So that's just a quick overview of how to set up your chart per trading view. You can always do that anytime you like. I've changed my chart like 1,000 times. So you can do that as many times as you need. This is the free version. Now, if you decide to go into a paid version, there are going to be more features available to you, but this is the free version for now. So on TradingView, over here, you will hear some people, particularly myself and some other people, talk about indexes. So indexes are going to be listed right here. And if you don't see it, let me know. But this is where your indexes are going to be when it comes to TradingView. So you'll look over here and you'll pick out your index. Now, we are using USDJPY. The index for the USD is DXY. This is the DXY, that's the US dollars index. JXY is for the yen. So the common theme when you're wanting to figure out what your indexes are, it's usually, I think the dollar might be one of maybe 2 or 3 that start with a different letter than what the country starts with. But we all say the dollar, so it's DXY. The yen starts with J, JXY. The Aussie, I think some people also call it Kiwi, is AXY. And then, of course, if you hover over it, it tells you what it is. So no biggie if you don't remember that little trick to figure out which one is for your index. Hover over it, it tells you what it is. Now, When it comes to your indexes, it should be a part of your checklist for when you get ready to decide whether or not you want to go into a trade. If the index is greater than 10%, either negative or positive, then you can say a part of your checklist or a part of your bias that that particular currency is getting stronger or weaker. So if I look at the DXY versus the JXY, and I'll just put them together, but if I look at the DXY versus the JXY, I see that the DXY is negative 24% and the yen is positive 18%. To me, the DXY would be considered stronger because the further away from zero it goes, the is weaker because the further away from zero it goes, then when you're looking at negative versus positive in that respect, it's weaker. And then the yen is at plus 18%, so it's positive. So that's how it's supposed to go. Does it go like that 100% of the time? No, there's always going to be something else that can make the market go in the opposite direction. But that is one way to see what you're looking at as far as which currency may be stronger. Okay. Do you have any questions on the indexes?
I have a question.
Go ahead.
You said if it's not in there, is that box up there that says add symbol? Can I add it over there?
The box that says what?
Watch list, add symbol. Is that where I would add the DXYs that I don't see on mine?
Yes.
Okay.
Now I moved mine because you can move them. Like they move. So I had mine moved where I had the GBP and the DXY together so I can see them together. So if you don't see it, kind of just scroll, and then if you don't see it as you scroll through, then, you know, come up here and add it.
Did you say AXY was for the New Zealand dollar?
It is the Australian AXY. The New Zealand dollar, I believe, is in.
Right. Okay. NXY for the Kiwi.
Yes, sir. I think I called Australian Kiwi,
right.
but that's not right. Sorry about that.
Yeah, Kiwi is New Zealand.
Yeah. Okay. So down here, right here where it says details, you'll see it tells you what the ultimate results is. Like it's saying the yen overall is kind of, the USD JPY has been in a negative stance, so you can see that it's pulling down. So if you don't quite understand your indexes, which is fine, you can always look right here and you can see one thing that Anthony also teaches when he does his classes, or talks about when he does his classes. He also talks about the average daily high, the ADR high and the ADR low. That's also available right here. And it shows you where it's at compared. Is it closer to the high or closer to the low? You still need to look at your chart and make your own analysis before you go into your trade. But if you just want to see where it's sitting at a glance, you can come right here and look. But again, you still need to make sure that before you get into your trade, that you check all of the boxes for your confirmations before you actually go in. And then over here, you get some news events. Headlines will pop up right here. You can click on it and read it. It's, you know, it's good to know what news is coming out. Just saying. I look at news a lot. Not really from here, but from Forex Factory. I look at the news there and investing.com. But if you're on this trading view, you can also look at news right here. Not to say that one's better than the other. It's whatever is most convenient and that you find works for you. Over here on this side is your tools. This, if you have this clicked like I do, it pretty much locks whatever tool you have up here. So it'll continuously drop that tool. If you don't like that, unclick it, you're good to go. Here in this box, you'll find your different ways to drop your lines. So trend lines, info line, each one does a different thing. I primarily use the horizontal line, the arrow, and the trend line. And you see I use horizontal and trend the most. It has the star. You can, you know, do that and it'll populate this little box up here. And then you'll just have quick access to your tools that you most commonly use right there. I also use the fibs. This is the one that I use, fib retracement. So I'll just drop one. So for my fibs, grab it again, sorry. So on my fibs, I keep clicking it. There we go. So on my fibs, if you just go to the gear, you can change how your fibs look to suit you. If you have sensitivity to the brightness of your screens, this is where you want to go. Change it so that you're able to look at your screen in comfort. I only mark the 0 to the 1. You may have all these other boxes checked. I unchecked them. This is all I need is the 1 to the 0. And then I highlighted my 0.382 so that you guys can actually see where that area is when you're dropping your lines. My fibs are also in reverse. If you don't like it in reverse, that's fine, but it's up to you. You just check it. Okay. All right, so that's kind of a quick rush through on some of the features that TradingView has. So to get into our actual beginners class to show you how to find your support and your resistance and how to mark your charts so that you can see what direction the market is going, and then you can start to analyze it for yourself. It's called a top to bottom analysis. So we start this top to bottom analysis on our daily chart. So mine says 15M. You want to click there, right next to where you would type in your pair. And you want to scroll down to daily. Again, if you want, you can put the gold star by it and it'll give you a box so that you can see all that in another little box that you can just go to and click. But I'm fine with doing it that way. So once you have your TradingView chart on the daily chart, you want to grab your, actually you want to change your candles. So you want to click on the 2 candlesticks, the Japanese candlesticks that you see right next to the D, and you want to change that to Hikinashi. So I'm probably going to say your name wrong, and I do apologize, but Mr. Eknal Radaray?
Yes, ma'am.
Okay.
Yeah.
So earlier in the week, a couple of days ago, you were saying about direction. So that's where your Hikinashi candles can help you on TradingView. You can also drop Hikinashi candles on your regular charts through your MetaTrader 4, but we're on TradingView. So if you change over to the Hikinashi candles, you have no, it's plain as day what direction this is starting in. It went down, came here, and it began to go back up. So you can see clearly a downtrend reversed into the uptrend. How long it's gonna stay in the uptrend, now that's only something time will tell, but this is how you actually see your direction. Does anybody have questions on that besides Mr. Radaray? Yes,
actually, I do. I just got in the room. Can you explain that again? I'm sorry.
No problem. So when you're wanting to see the direction of your candles, when you come to TradingView, if you just come here where it says candles, hover over it and it'll highlight and say candles, open up that box drop down to the Hikinashi candles right here. And it takes out the noise, so you don't see price fluctuation. You actually see the actual volume of the market. So as you can see, it continued down. It got to the low. It pretty much did a market reversal, and then it began to go up. Okay. So that's one way to be able to see your direction. Another way, honestly, is
What time frame do you use to look for direction?
daily.
Okay.
So that's how we can see the direction. Now, on our daily chart, as I just mentioned, daily is the chart for direction. So I'll go ahead and type that on here for you. So on my daily chart, once I figured out my direction, what I want to do is drop my support, and then I want to drop my resistance. So I want to drop my low and then drop my high. I go in order. I pick the horizontal line, and then I go in order of how the colors start. So I always start with the left, so that every chart that I mark up, I'm not looking at different colors, and therefore I don't get confused on, you know, oh, what did I use for this chart, so on and so forth. So just keep it simple. I just use it in order. So looking at the daily chart, I would use right here as my immediate low. And the reason why is because this is where it changed direction. So it came here and it changed direction. We do still like to look left, but initially when you're marking your chart on Fridays after 5 p.m. and on Sundays before 5 p.m., so you're doing this when the market is closed, you want what the market did last. You want to know where it was last. Because in all honesty, when people say, you know, the market likes this particular area, the market likes the whole chart. Because if you were to look at maybe a monthly view, when you look at the monthly, and this is a little off topic, but if you look at the monthly and you scrunch it up where you can see, you know, the past of it, there's probably not too many areas that the market hasn't touched and consolidated at some point in time. So I think it's kind of unfair to say this is what the market likes. It likes this particular zone. Really, where is it now and what has it done in that particular area is what you're most concerned about. Okay, so I have my support and I have my resistance. So basically I'm looking for, came down here, changed direction, and it came up. I'm not marking this because this is not the last high. So the immediate high that it made. It came here and it pulled back. So this is my high and this is my low. I wouldn't use this or this one here because that's not really where it changed direction. So once I have my support and my resistance, or my low and my high marked, then I look at the direction of the chart that I am working on currently. Currently, this chart is in a buy. So I want to drop my fibs in that direction. So I'm going to mark from the low to the high. So I want to mark from the low to the high. My 0.382 is the number that I am most concerned with because this is the area that the banks are most concerned with. You don't want to be concerned with where other retail traders are, because as a retail trader, the banks are looking to take your money. So you don't want to be on the side of the pool that the shark is trying to eat from. You want to be on the side of the pool where the sharks are. So you want to be on the 0.382. And then you take that same horizontal line, you just mark it with dashes I use the settings on the coordinates box, and then I just drop it right where it's at, 197. And then I remove the field. Okay. Does anybody have questions on the daily chart? Yes, no, maybe? Okay. So since Miss Alba is 2 days old when it comes to this, I just wanted to let her know that each one of these candles represents 24 hours. So it takes 24 hours to form one of these candles. So if you are looking at your daily chart and you're like, well, it's the same candle and it's been the same candle all day, because that candle takes 24 hours. So there's nothing wrong with that. There's nothing wrong with your screen or with your platform or anything of that nature. 24 hours to form one candle on the daily chart. So after we have our daily chart marked up, we move to our 4-hour chart. And again, each one of these candles on the 4-hour chart represents 4 hours. Okay. So I want to do the same thing. Now, however you need to see it, scrunch it up, spread it out, but however you need to see it, you know, make it work for you. But we're doing the same thing as we did on the daily chart. We're looking for the immediate change in direction for our support and our resistance. So I come back to my horizontal line. I move to my next color, red, here, and here. So I mark my support and I have my resistance. The 4-hour chart is for your momentum. So you're just basically looking at the strength of the market. That's all you're looking for on this chart. There's no fibs for this chart. So you just want to see the strength of the market. Is the market actually moving? Because it takes 4 hours. So basically you're saying, oh, for the last 4 hours, the market's been going down. Last 8 hours is going down. 12 hours, 16 hours. 16 hours ago, the market changed direction. You have a pin, well, not a pin, but you have an indecision candle right here, and you see that the market started moving down. So you're just basically looking at the 4-hour chart for your momentum. Does anybody have any questions on that? Yes, no, maybe? Okay. Okay. So once we have that, then you just move to your 1-hour chart. Now, our 1-hour chart is very important to us because our 1-hour chart gives us our take profit and stop loss. Now, for some of the older people, you enter in on the 15-minute chart. I know that's probably a question that's going through your head. Yes, you find your entry on the 15-minute chart, but you look for your take profit and stop loss on the 1-hour chart because there are more pips in the 1-hour chart than there are in the 15-minute chart. You actually get in sooner on the 15-minute chart, but if you're only holding it for 15 minutes at a time, the amount of pips in the 15-minute candle versus a 1-hour candle, there's going to be a big difference. So you want to make sure that, you know, if you are correct in your analysis, you want to make sure that you get the most pips for that particular trade at that time. By all means, do not be greedy and over trade, but if you've done the analysis properly and you're confident in the direction that you have chosen to take your position, why not go ahead and, you know, get the most out of that movement? I believe Mr. Oren was saying last night, you know, is a 80 pip candle a good candle? Or, you know, he pointed out the 80 pip candle. He's like, what's wrong with the 80 pip candle? Yes, there are probably some 100 to 200 pips that was in that movement, but 80 pips is still nothing to sneeze at either, especially if you stack or, you know, compound your trades. Now, 1 hour chart, as I mentioned before, is for your stop loss and take profit. We are doing the exact same thing that we did on the daily and on the 4 hour chart. We're marking our support and our resistance. We just moved to the next color. 4 hour was red, 1 hour is orange. We look for our immediate change in direction. So I would come here because this is the last low. The direction actually changed down here, but that's a little older than what we would like to use. So we would come here for our low, here for our high. You want to be on the body of the candle as much as you possibly can. And then we look at the chart and we
Quick question.
Yes.
I was distracted, but what you're looking for is the most recent highs and lows in the market?
Correct.
Okay. All right. Thanks.
No problem. So now that we have our most recent high and low marked, or support and resistance marked, what we're looking for now is the actual direction of the market. So we do drop a fib on this chart. We will drop a fib on this chart. So as soon as I can find my box. I lost it somewhere. There we go.
Hey, Tina, could you show where we get that fibs from for our new people?
Yes. My box, man. All right, sorry about that. I was looking for this here. So once we have our support and our resistance marked, or our highs and our lows marked, then you want to drop a fib. So remember, your daily chart gets a fib. Your 4 hour chart does not get a fib. Your 1 hour chart will get a fib. When you go in to grab your fib, you actually want to go here. Fibs are right there in this box. Sorry, it's a horrible arrow, but you get it. The fibs are right there. So you do want to drop your, click on the little bitty box right here. You'll see it. You'll see the tool will highlight itself. And then I use fib retracement. So that's this one here that I have the yellow star beside. Click on it. And this chart is currently in a downtrend. So our daily chart was actually in a uptrend or a buy. The 1 hour chart is actually in a downtrend. So I want to start with my high. So I'm going to start at the top of where my orange line is at the top, down to where my orange line is at the bottom. So you're going from your resistance to your support, or your high to your low. Again, you want to pay attention to the 0.382. Come back, grab your horizontal line, change it to dashes, drop it. I use coordinates because coordinates gets me right on it. And you just type it in. 0.561. And then I just right click and remove the fib. So our 1 hour chart, just to go over that again, our 1 hour chart is for our stop loss and take profit. Oh, I did that. So every 1 hour. Here's our stop loss. and take profit. It gets a fib, and the fib line was 111.561. If for some reason you want to keep track of it, but you can keep track of what direction each chart was going. So pretty sure that's not how I'm supposed to spell it, but whatever. And sometimes just honestly, if you do this little box for every part of your chart, it's so much easier when you go back to look at what your thought process was when you were marking up your charts when it's later in the week. So we have that marked. Our next chart that we want to move to is our 15-minute chart. Same thing. I mean, it's kind of redundant, but it is. Same thing. So 15-minute chart. Our 15-minute chart, we use that for our entry. And the 15-minute chart will also have a fib. So exact same thing. I squish up the 15-minute chart just because the 15-minute chart moves a lot faster. Each one of these candles on the 15-minute chart takes 15 minutes to form. So it's 15 of the 1-minute candles or 3 of the 5-minute candles. It takes 15 minutes to form one of these candles. So what I'm looking for is the exact same thing. We're gonna find our support and our resistance. So you wanna use the immediate information. Yes, this is the change in direction, but you want the immediate information. So this is where it was at last for a low. This is where it's at last for the high. Why are we not using this one? Because it's kind of like a 1 hump, 2 hump rule. So this high right here is like your 1-minute high. This one would probably be more or less your 5-minute high. This is your true 15-minute high. Okay. Same thing. Once we've established our support and our resistance, our low and high, you want to come back over here. You want to pick up your fib. You want to take a look at this particular chart, and you want to drop your fibs in the direction that this chart is moving. This chart, for me, is kind of in a sell because it moved up, didn't really go back higher, and it continued down. So I would actually say this one is in a sell, so a downtrend. And then we're going to do the exact same thing. We're going to get our dashed line. We're going to put our fib on the 0.382. So that was 111.619, and that was a downtrend. Is it DXY? Our DXY was negative 24%. And the yen JXY was positive 18%. So this is how you would normally do it on a Friday, Saturday, Sunday, early before 5 p.m. This is how you would normally set it up, and this is strictly so that you can see your thought process while you are starting this up. Because I can guarantee that even though you are marking up, charts, you're not going to remember every little detail just because you marked it up, unless you're only marking up one chart. Now, if you're marking up 4 or 5 different charts, then this is a routine that you would like to incorporate in your trading strategy so that you can understand where you were. Whether you do it on TradingView, if you do it on TradingView, then if you pull your TradingView chart up on your phone or on another device, all this information gets automatically saved for you. So it's right there when you pull it up. If you choose to journal it in a notebook or whatnot, then you would just go to your notebook and you would look back. But either way, this is a good thing to do because it goes back and it makes you think about your overall process. Another good thing about it, if you got it wrong, it helps you realize, okay, well, maybe, and everybody does it, you probably dropped your fibs in the wrong direction and wasn't really thinking about it. Like it happens, we're human. But if that were to happen, if you have journaled it and you can go back and look at it, then you can see your mistakes so that you can be aware or more conscientious of how you're going to mark your chart up come the next weekend. So when it comes to support resistance and our 0.382, before we move on, is there anyone who has a question on that? This is the time to ask the questions. Please don't feel like you're interrupting. Ask it now while it's fresh on your mind.
What is the 0.382 for?
The 0.382 is where the market makers or the bankers get into the market. If you get in on the 50 or the 0.618, that is your retail traders area. So basically, when people say the market's going to retrace 50%, who are they taking out? They're taking out people who jumped in on a trade because it hit the 0.618 line or it hit the 50% line. But if you look at a chart, if you were to mark up, I would say everybody today, mark up just a random chart. A chart that moves though, but mark up just a random chart that you don't plan to trade this week. Mark it up and look and see how many times it got to the 0.382 and continue to I think it's 0.23 something and then 0. And then that right there in itself will let you know how powerful the 0.382 is. Because once it hits 0.382, it's going to continue in that direction. I mean, I learned that with the 50%. If it breaks the 50% and it hits that 0.382, it pretty much kept going down. So a lot of people trade the 0.50% in hopes that it will continue in that direction. But that's also a good retracement area too. So you want to make sure you're done with the retracing part and you're getting the candles that are actually got momentum and got volume behind them, if that makes sense. Yes, no, maybe, just a little bit.
I have a question.
Yes, ma'am.
The markup that you showed us, like after the market closes, is this just once? Does it extend through the week until it closes again, or I'm trying to figure out, would I have to do this every day, or just like by Sunday before 5, or?
Okay. So you are to react to the market. So you mark it up on Friday because you're taking a look at where the market has been that week pretty much, and you're looking at where it ended. So you're marking your highs and lows based on that. So when the new week starts, as long as you got pretty decent support and resistance per chart, I would not expect your daily charts to get blown on a Sunday. Your daily charts, if they get blown, you're going to see them blow towards the end of the week. Your 15-minute chart, that's going to be your main concern of whether or not you have to go in and readjust it. If you have to, it's no big deal. Honestly, towards the end of the week, you should have to take a look at your 15-minute chart sometime between, I would say Wednesday and Thursday. I would say look at your 15-minute chart if you haven't looked at it since, Sunday, and see had your support and resistance got blown. It's no different than if you're on your actual chart and you're using that indicator that draws your support and resistance. If you ever notice that at some point the 1, 5, and 15-minute support and resistance always gets redrawn, well, that's why, because it's reacting to the market right then. Will you have to do it on this chart? Yeah. I mean, I'm not gonna lie. Yeah, you might have to do it. Will you have to do it on Sunday? If you got the correct highs and lows, no. It's gonna be late Monday or sometime on Tuesday at the earliest that you're gonna have to redraw it. And then you're gonna do the same thing. You're just gonna go to your 15-minute chart. Where's the market? Where is the last low that it made before it started to come back up? Where did it start the V formation? Right here. Then it begin to move up. Drop your low, find your high, drop your fibs, and keep it moving. I mean, it's not one of those things that, don't be like me. Don't overthink stuff. I mean, like, if it moves and it blows, just redraw it. What I will say, this markup can last, and the only ones you will have to redraw the most often would be the 15-minute.
Okay.
The daily,
So
and the 1 hour, and the 4 hour, those are very strong support and resistance. You'll see it get close on the 1 hour, and you'll see it turn right back around. If you see it get close to your 1 hour support or resistance, whichever trend it's working on, if you see it gets close like it did right here on the 15-minute, and it touch it and it comes down, just say, hey, market wasn't strong enough to break it. Still good. Market wasn't strong enough to break it. Still good. Got here, broke the 15-minute, got close to the daily, didn't break it. So, I mean, being completely transparent, will you have to do it? Yes. You got NFPs. You got the NFP that comes out on Friday. That market for that whole week is very volatile. You get those huge candles. Those huge candles are going to blow your markup at some point. Redraw, regroup, and keep going. Never predict the market. Never. Because when you're predicting the market, you've already given yourself a bias. You've already said, I want the market to go in this direction, and that's the only direction that you're looking for. The market's not going to do that. You got to figure out what the market wants, what the market is doing, and where can you meet the market in the middle so that you can make some money. Does that make sense?
Yeah. So basically, the lines, you can just adjust them.
Yeah. You just pick them up and move them.
Okay. All right. Thanks.
No problem. Anyone else?
I'm trying to figure out, how do you use it? When will I know to enter a trade?
Okay, so that's the next step. So once you have your chart marked up for your 15-minute highs and lows and so on and so forth, the next thing that you want to do is you want to find out where it's at in the market. Where is it going? What is it doing? I'm going to put you over here. So go back up here where we changed it to the Hikinashi candles from the normal Japanese candles, and you want to change it to your line. How many people were on Oren's Zoom last night? Were you guys on Oren's Zoom last night?
Missed it, and I hate it. I missed it.
It's okay. Okay, so he was talking about using the lines as well.
What's wrong?
So when you go to your line, what we're gonna do here is we're gonna draw out our channels, and I'll draw this one out on the 15-minute chart. Now, what I will tell you about channels If it's not there, do not force it, because then you're gonna draw a channel that's no good. If you don't have the correct peaks and valleys,
Like medicine?
leave it alone and let the market form. So what I'm looking for here, because I said it was in a downtrend, what I'm looking for is the high here for the 15-minute, because I'm on the 15-minute chart. You don't necessarily have to use this line. You can start here, but it's the 15-minute chart, so I like to stay in order. So I'm gonna start here for my 15-minute. I'm gonna draw my channels from the top of my 15-minute chart high to my support on my 15-minute chart. So because it's a downtrend, we're going to go from the point to the point. So this is a valley to valley on a downtrend. So I have a valley and a valley. And then I want another valley to peak. So peak is like, it's a V. Don't make sense because you would think the valley would be V, but it's not. The peak is the V formation. So I'm gonna use this one because I want my channels to be even as I can get it. And then my last channel is valley to valley to peak. Just like that. Okay. So once you have your channels drawn, then you're going to see if it's in beginning, confirmation, continuation, or end.
What are you gonna do? What?
So
What?
because we're on a sale,
Mom.
we're gonna
What?
have,
I know, tell Mom what? Now you can text him, he hasn't responded yet. Doesn't he?
okay. So because we're in a sale, we're looking for it to go down. So you want to figure out, am I at the beginning or am I at the end? So out here. So we're going to have beginning, confirmation here, continuation is here, and then the end here. And then you can go back to your Hikanashi candles. So make sure you can see. Okay, so when we're looking at this, you want to look for the last time it peaked out. So peaked out, came down, 15 minutes, yeah. So we came down, it hit, came out, clear sale. Clear sale. Came out, went up, came back down, hit here. Oh, I did it so backwards. So when it hit here, this is the beginning because we do have a wick, 2 wicks actually, that came out. So this is your beginning. So we're saying we're still selling. Beginning, still in the confirmation zone. If these lines came down further and the market moved down further, you would see it come down here. You would say it's in the continuation, just like it did here. It peaked out. This was the beginning. You got a confirmation candle. You got candles in here for your confirmation. You got candles in here with the continuation all the way down to the end. The next step would be to draw the same channels or similar channels, depending on the direction. You want to draw those same channels either in the direction of your downtrend or in your uptrend, and you're looking for the exact same movement. So you go back to your lines. And see, I would have started here, but you know, I didn't want to really start there on the 15-minute chart. I wanted you guys to see how to do it from the 15-minute chart. But if you can obviously see a high here that's better, go with the better high so that you get cleaner lines. But for starters, you know, you want to kind of, I should have made my lines orange. You want to kind of practice getting it, because the 15-minute chart, it's a horrible little chart to draw lines on, because consolidation lasts a whole lot longer for some pairs on the 15-minute chart. And that's why I said, if you don't see your peaks and valleys, don't force it, because it's just not there. So our 1 hour chart, it's got maybe 2. Our 1 hour chart only has 2 channels. I really don't think it would be good to do 3. But you got this one and this one.
So you got that line there touching 2 peaks, right?
This is a downtrend, so it's 2 valley. Wait. The point.
Okay, so this is what I don't understand, because I don't understand the second and the third line, but the first one was peak to peak. Is that correct?
Valley to valley. Remember, it's the valley. So a valley is
yeah, but your first line was peak to peak, correct?
No, that's what I'm saying. It's actually a valley.
Okay.
So
Okay.
Is the V like that. And then the peak is
upside down V.
Pretty much. Which makes no sense to me, but that's what it is. Like yeah. Because that was where I used to always get so confused. So I understand what you're saying, because V valley, right? No, it's totally opposite. The V is not the valley, it's the peak. Wait, did I write that right?
Okay. You got peak upside V. You might want to peak upside down V.
Yeah. No, I got it backwards, because the peak is the V. The valley is the upside down V.
Uh-huh.
Yeah. So does it make sense? No, I think it makes it harder. I think the language is there to confuse you on purpose. 1 second. But okay, so yeah, so your peaks are your V's. So that's these things down here, and these are valleys. But I don't really see I don't see what I need to see for the third channel, which would be valley to peak. So
that second line, I'm not seeing where you connecting it.
Oh no, because I stopped to write, sorry. But it's valley to peak, so it's right here. It's that kind of point down there. So as long as you touch it or go through it, it's a valley point.
So from the top of that to that V, I think I see what you just did.
Yeah. So like I would look for like valley, peak right here. But to me, it's kind of forcing it because of the distance between the two. I would wait for the market to
I
form just
see
a
that.
little more. So I would wait, honestly, on the 1 hour chart, I will wait for the market to form a little bit more, or it's up to you. You can go to the 4 hour chart, the daily chart, and you can draw the exact same channels. It'll tell you the exact same thing. You're just going to be in the trade a lot longer because, you know, the time frame difference.
When it adjusts, though, you can move your line, correct?
Yeah.
Yeah. All right.
So yeah, that's why I was saying when it comes to your channels, if you don't see it, don't force it. Just wait for the market to develop so that you can get there. But you want your channels to be somewhat even. And if you are proficient in using the fan, like Anthony was telling me, it's pretty much a manual way of drawing the fan. If you know how to use the fan, then use the fan to do it. But if you don't know how to use the fan, this is poor man Sam way of doing it. But as soon as you see it peep out, you just start, you know, flopping this around basically, and you look for it to go. You just flop it around because now you're in the beginning stage. This is your end stage. It peeps out on this side. Switch it around, and you just basically just keep doing it that way. As the market moves, redraw your lines, redraw your channels. And is it beginning, confirmation, continuation, end? Does anybody have any questions on channels? And if you do, it's fine. I expect it because it took me a minute to get it, so I don't expect
If you don't mind, can you erase 3 lines and draw them again so I can see how you did it?
Yeah, I'm just going to. So I just switched to the daily chart so we'll have more peaks and valleys to go with. So you can kind of see it.
Okay.
So I don't know if you can see, but the resistance line or the high line is like right up in there, sitting with the 1 hour line. They're kind of together. And then down here is the support.
Right, Bert.
The reason why you don't see this line exactly on the candle is because if you go back, it's a wick or a big the candle. It basically takes out the. I hit the wrong one. Hollow. So yeah. So here we have our upside down V. So this is a peak. And then peak to peak for a buy. So I hit that peak,
Peak to peak.
and that peak. Now, if you chose this peak, then you're gonna make your channels a little narrow. You want room to breathe because there are going to be pullbacks, like little bitty pullbacks within, but it's not necessarily changing direction. So, kind of basically how you would draw a trend line. And if you don't know how to draw a trend line, that's pretty much how you. This is pretty much how you would draw a trend line on a chart on your MetaTrader 4. You find your high, and then you draw it to the next high, or in this case, low. So here's my low, here's my next low, and go from there. Then you want to go, we got peak to peak. So now you want peak to valley.
And where's your valleys that you're looking at?
Well,
Just
I
that one
looked
on
at
the
this
end?
one first. I looked at this one as my valley
Uh-huh.
first. And then I just go back and look to see if there's any other valley that would probably be a better spot. But I'm cool with this one
Okay.
because these are pretty much peaks. I mean, you can use this one if you want to go with the first. It's all going to be personal choice, really. But I just picked this one because this one stood out to me first. And then I just go back and then I look again to see if there could have been a better spot.
I see it.
And then now for the third channel, we're going to be going from peak to peak through a valley. So now we got to find a peak. We got our first peak, so now we need a second peak. Choose this one. So I have peak through peak. Here's a valley. There's another peak, and then there's a valley. So I have peak through, and then to another one. And I chose this one so that I can get somewhat of an even line or an even distance between the two. I mean, you can bring them in just a little closer and probably do it there to take out this peak through this valley to this peak. I'm sorry, peak valley. And then you label accordingly. So we're in an uptrend. So you want to see where the market currently peaked out last. So then you go back to your normal candles, your Hikinashi candles, I'm sorry. So actually, probably should draw way up here. Now this line absolutely means nothing. I just use this as the next high, previous high. And then you can take your lines, if you need to, you can take your lines to that so that you'll have, because I don't know, I like to do that. I like to have space for the market to move in the channel. And then that way, you see how you can see it better because it don't get like cut off right there. You can see your channels go better. So here is your beginning side because this is your last out. So this is beginning, confirmation, continuation, end. So until it peeps out on this side, then your bias at that point is it's gonna continue to buy.
Mm-hmm.
Okay, so this is actually a better channel because you have a peak through a peak right here to a valley.
Yeah.
And so like I didn't see the name because I don't have the names up of the lady who was speaking earlier about redrawing. If you have to redraw, you just redraw because things happen in the market and sometimes we don't see everything. So that's why we have our checklist. And that's why doing it on Saturday, you have time to play with it. The market's not moving, so you don't have candles changing directions on you, making it confusing for you. So you got beginning, confirmation, continuation, end, because you got a peak out right here. So this is where the sale would, you would say your sale would start, and you would keep going down. So does anybody have any questions on channels? And if you don't right now, practice them, and you will. That's the best way I can say it. Practice them, and you will, because you probably gonna second guess yourself just a little bit, just until you get comfortable with doing them. But before I take them off, does anybody have any questions? Once, twice, no, maybe. Okay. Another thing that you
So
guys,
peak to peak, peak to valley,
for the
peak
buy,
to peak
it is
to a valley.
peak, yeah. So your buy is going to be peak to peak for your first line, peak to valley for your second line, and then peak to peak through valley, and then vice versa for the sale. It's valley to valley, valley to peak, valley through valley to peak.
Yeah, thanks.
Mm-hmm. Okay. Now, where do you get in? Go to your 15-minute chart, because our 15-minute chart is our entry chart. And what we're looking for, come over here to your shapes tool, grab a square. I'm on the 15-minute chart. So, and I've already said the 15-minute chart was in a downtrend. So I'm looking to get in at my 0.382. My 0.382 on my 15-minute chart is marked in yellow. So I'm looking for 3 candles to have come to my yellow 0.382 line and close below. Not hit it with the wick, not close above it with the wick coming down like here. We want the body to actually break the line and close below. So I would say 1, 2, 3. There's my first, the first one that I found, I should say. And then, because we're right here in the market, and we're looking at how many times it broke below here. So I have 3 here. Where did it do it before? It did it right here. So I put a square there. And on this chart, we're actually lucky to see another one here, pretty much. This is an indecision candle. I really, because it's Hikinashi candles, you can see the direction better, but for demonstration purposes, I normally wouldn't use an indecision candle, but for demonstration, just to show you. So I have 1, 2, 3 areas where it closed below. So say I went with this box first, like I was super excited and I went with this box first. I would mark that box as my first part for myself. So I would say A1 for active 1. And I put that there. And then I do another one for here. Then I have 3, but I don't get 3 above. So I have here and here. So what I would do at this point, if this candle came in red, this is where I would get in on this candle for the sale. But it didn't come in red, it came in blue. So you always want to wait for the candle to close. Just because you have 1, 2, and you see this candle is red, it didn't close because this candle at some point was red. It went blue, but it closed right pretty much where it opened. Where's another one? This candle it opened down here, went up and pulled back, so it probably never went red. This candle, well, as you guys watch the market, you new people, as you guys watch the market, I think this one might be a good one where it probably started out red and then pulled back a little and turned blue. But you'll see a candle can start out in one color and then go back to another and completely end up closing at a different color. So you always want to wait before you enter. You want to wait for your candle to close. Okay. So we have these 3 candles here. Now we have 1, 2, 3 candles above. Grab your box, and I color coordinate my things so that I know what I'm looking at. It's just easier on me because never know what I'm doing throughout the day. So just want to make sure. And because the market is closed, just go through before you even start making a decision. Well, I should have got in here, or I could have got in here. Just go through and find the candles, because that's all you really need to do on a Friday, Saturday, Sunday. Just go through and find the candles. Then I draw my box, and I go A2. Because these two go together. So your A1s or your first A's, if you choose to use A, mark them however you want to remember it. You could say S1 for sell or B1 for buy. But active one for me right here, got in on this candle, it pulled back, came down here, got out at the indecision candle right here. So you can take that trade. I would not have because of the indecision candle. But say I mark this one as my A1, and then I mark this one as my A1. I put these two together. So I have 3 candles here under my yellow. This candle came in blue, so I never got into the trade. It pulled up, played up here. So when I seen I had 3 blue candles above my same entry, I marked it. Yes, you missed all this playing around, yes. But you're always waiting for your retest. So I have 1, 2, 3 candles here, and I get in on this one. It goes up, it pulls back, still doesn't break below, so you're safe to hold it. Still doesn't break below, so you hold it, pull up here, depending on your stop loss and take profit. If you got out here, then you would have been in from about here to here. And this is why the 15-minute chart is not where you really want to hold it. But so you got in here to here. That's only about 9 pips from there to there. Or really 8, because you probably was in on this candle. Probably got out around here. So you probably closed with about 6 pips. So about here, so anywhere between 6 to 9 pips is what you would have gotten by getting in on that candle on the 15-minute chart. Does anybody have questions about the 3 above and 3 below? There's no maybe. Okay. So now that I see that I have my 3 above here, it plays around, gets here and you see red candles, but then you see 3 come here. Now, here you entered. If for some reason you just held out and you get your first red candle to close here, second red candle to close here, third red candle to close here, it's safe to say, because you have 3 candles that went below your 0.382, you need to either have gotten out or be getting out of this particular buy because you're already negative and you don't want to go very negative. You don't want to blow your account. So if you haven't already gotten out, when you see these 3 red candles, you need to be making an exit out of trade. So then you want to say pause. Your buy is now paused. It's no longer in a buy. So we're looking for the retest for the sell. So what I'm looking for now is 3 for the market to move back up here and to have 3 red candles close. And please don't think that, when you look at the market, you're going to see 3 red candles exactly where this box is. It's just for demonstration. But I'm looking to have 3 red candles touch or come back to it and close below just like it did here. So your buy is on a pause. You have a new set of sell indicators that you're looking for. So you're looking at this one as your test. So now this one goes here because you're waiting for the retest to happen over here. Does anybody have any questions about test and retest? Yes, no, maybe. Okay. All right. So once you have your retest, then you know this is your entry point. Well, back up. Once you have your first test and you're looking at this to be your entry point because you're waiting on the retest. So we're over here. We have our first test. We're waiting on our entry point. Our retest for our entry point. Our entries are always done on the 1 hour. So then you want to come over here to this side of the screen, to the left-hand side of the screen, and you want to pick up your long position and short position tool. Long position means you're looking for the buy. Short position means you're looking for the sell. We are looking for the sell, and we're looking for it to happen. We're looking to get in on our 15-minute entry. So I drop my tool. Red is for your stop loss. Green is for your take profit. We want this to be as close to 3 so that we have a 3-to-1 ratio. So a 3-to-1 ratio means that you're looking to gain 3 pips for every 1 pip that you are willing to lose. And I can't get it perfect. I apologize because I'm not perfect like that. But so that means on this 3-to-1 ratio, I'm willing to gain 17 pips. I'm willing to lose lose 5.9 pips to gain 17.9 pips. So that means my stop loss is right here at 111.681, and my take profit is down here at 111.443 on a sale. So from here to here is 17 pips. So you're looking to gain that many. Now, if you want to change your ratio, by all means, you can do that. That's completely up to you. Just make sure that you're practicing proper risk management. 3-to-1 ratio is not bad. They say 1-to-1 ratios is more of a gambling style. And, everybody says gambling is bad. So, yeah. 3-to-1 ratio is what I was taught is the better way to do it. Does anybody have questions about proper risk management and how to use the short and long position tool? Yes, no, maybe. All right. Now, say for instance, you missed all this on the 15-minute chart, or you prefer to trade off the 1-hour chart. It's completely up to you. You're going to use your 1 hour 0.382. So what you'll do if you're trading from the 1 hour chart, you do the exact same thing. We have 1, 2, and an indecision. 1, 2, 3. So if you use this candle, and this candle as your first test, probably second test, but we're gonna go with this. So here's 3 candles above. Where did those 3 candles for the orange line come above before? Not there. Over here. So test. Retest. Do you take your buy from this candle? From this candle, it actually hit your daily support and your 1 hour support, came straight through your 4 hour support. So if you had a trailing stop or whatnot, or if you only decided that you wanted 10 or 15 pips, you would have gotten from this entry point, your 4th candle, you would have gotten from here to here, which would have been 29.4 pips. Does anybody have any questions about that? And why we get in after the retest? Okay, so currently for UJ on the 1 hour chart, I would say it's, you got your 3 below right here. You have another 3 below for the 1 hour chart right here. And you have 3 here. So I would actually mark for the 1 hour chart, I would mark here. And I would mark the ones here. Don't trade on Sundays. That's the golden rule, because Sunday and Mondays are trap days. Sunday, Monday, and Fridays are trap days, false move days. So really Friday is more of a continuation of what the market is already doing, or if it reversed, it's going to continue to go in that direction. But you really want to get out of your trades on Friday morning before noon. So you want to start looking to take profit sometime between Thursday evening before the Asian session. If you can. If not, you want to start looking to take profit or take minimal loss before noon on Friday, if that's what it comes to. If you choose to hold it, that's completely your choice. Just understand that from Friday at 5 p.m. to Sunday at 5 p.m., we cannot see the market move. So these candles don't move. The market in the background is still moving. Things are still happening that we cannot see. So oftentimes what you may have happen on a Sunday when the market opens is what they call a gap. So that basically means when the market opened, the market closed here, it can open up here. The market can open up here, or it can open down here. If you are in a buy and the market opens up here, you've just made money. If you are in a buy and the market opens down here, well, you just lost a good bit of money because the market closed here. So that means from here to, it didn't do it, I gotta hold it. So from here to here, you just went negative 22 pips and you didn't even see it because the market opened at a low and you are in on a buy. So if at all possible, you want to be able to close out of your trades on Friday before noon. Take profit if you're comfortable with your take profit. If you have a loss and you're comfortable with taking a $1 or $2 loss, unless you're trading on some really high lot sizes, hopefully you have a large account to support that, you know, but the decision is ultimately yours. Does anyone have any questions, concerns, or anything that they would like for me to elaborate on? All right. So this is pretty much how marking up your chart for a beginner is. Well, kind of beginner and advanced when it comes to channels, but this is the basics that you would need to be able to mark your support and resistance. For you new people, if you are unable to figure out support and resistance right away, practice it. There are indicators for your live charts. I set this up right before we got started, but these red and blue lines, that's an indicator that you can download and place on your chart, and it will mark your high and your low for you, your support and your resistance. I like this particular indicator because it tells you if it's a verified support. If it's verified, that means it's been touched a lot. Turncoat means it was once resistance and now it's turned support. But it's a lovely little indicator to help anyone out, new and old people, or people who, you know, they trade but they don't want to sit in front of the chart all day. So the support and resistance indicator is something that can help you guys out, especially if you are, like Eknal was saying, he was having a hard time finding out his direction on a regular chart like this. You throw your support and your resistance on here, you can't help but see that this is in an uptrend. And this is actually a moving chart, so that's why this is crypto. So crypto moves every day, all day. It doesn't stop. So that's why I set it up on this, because you can see it start. This was the high, came down here, bounced off of your support, and now it began to move up. Does anybody have questions on that? All right, no questions. All right, so if no one has any questions, that's pretty much all I have for as far as beginners are concerned. If Anthony has anything that he would like to show us on Market Maker with our 3 pins and our levels, because some of us are still struggling with finding levels, more than happy to hear from him too. Do you guys know how to unmute your mics if you want to talk? Okay. So I'm gonna go ahead and stop the recording.